Aloha, everybody. It's Joshua Hayes at BigWaveTrading.com and BigWaveTrading.net. It's a beautiful day on Maui with a lot of waves in the water and a lot of paddlers paddling their canoes. So let's get to the charts on our weekend edition. The first thing I want to look at is the NASDAQ. The NASDAQ had a very powerful Friday. You see that it ended at 1774.33, the high a day. You can see that it had a nice intraday action, and you can see the heavier volume over the 50-day volume average. If you did not see it the intraday, since I don't have Telechart Platinum, I can't show you, but I can show you on FinViz. Look at the market. So all day long, the market was in a trading range. You connect that, connect these lows sideways, these highs. NASDAQ, kind of a pennant formation, and it broke out of it to the upside. And a consolidation area from the S&P 500, as you can see in the top and lows. However, the last 15 minutes of the day, the markets just took off on an insane amount of accumulation. Very strong volume, huge price moves. There is nothing that isn't bullish about that. It's all bullish. There's nothing not bullish about it. Everything about it is bullish. That's how you want to see them close. That's how you want to see it end, and you want to see it on heavy volume, and we got all of that. So not only is this intraday chart extremely beautiful by the NASDAQ, S&P 500, Dow Jones, but the daily chart in itself is very good. As you can see also, connecting the recent highs, it has been broken out to the upside. Easier to see on an arithmetic, as you can see here. Yeah, we're all the way out, so that shows it pretty clearly. You can see the kind of pennant formation that it was in, and you can see which way it went. We'll go ahead and play it out. Boom, breakout. Nothing but bullishness about that. Let's not look any further into it. KISS. Keep it simple. It's a breakout to the upside, strong volume, accompanied by a very, very, very bullish intraday chart. That's it. Let's leave it at that. Very, very bullish. I'm very, very happy. New York Stock Exchange. Do the similar thing. I can take a trend line here. Connect them against those recent highs, connect them against the recent lows, and as you can see, as it went to the pennant's apex area, breakout, heavy volume, everything's bullish about it. S&P 500, you see it's well above the 50-day moving average. Same thing. Connect those trend lines. Clearly, you got a bullish breakout. And from the March lows, it's nothing but bullish. Now let's go back to the day one and show you where the next resistance point is. It's at it. See that purple line on the screen? That's the 200-day moving average. S&P 500 is at it. New York Stock Exchange is over it. And the NASDAQ is over it. Now something even more, I'm going to get rid of the trend lines here. Look at the 50-day moving average and 200-day moving average on the NASDAQ. They're about ready to touch. What's such a big deal about that? Do you know when it was that the last time the 200-day moving average and 50-day moving average touched each other? Touched, by the way. Look at this. On January 15th, 16th, and 17th to the 18th, so the week of the 14th, 15th, 16th, 17th, and 18th of January of 2008, the NASDAQ broke down below with the 50-day moving average. Now, it's called a death crossing the 200-day moving average. And as you can see, as we went along, it just got ugly. Price may have gotten above the 200-day moving average, but 50 never got above the 200-day moving average, so no reason to ever get bullish. So they came close to each other, and then another break wide open. Right there led to them widening again. And as the downtrend went on, they got wider and wider. And as the March bottom put in, it wasn't that big of a deal. And it still isn't. But now that we have the 50-day moving average about ready to cross the 200-day moving average, price above the 50 and 200-day moving average, we are now about to enter a bullish stage of the market. And as I've told you before, had you just used this line as a buy-sell signal, you would have sold all of your stocks, and you would have missed almost the entire 46% of the 55% total downtrend. So you got to see about 8-9% of it, and then you got out. So let's say you're in the top and you bought, You didn't realize you made a mistake until right here when the 50 and 200-day crossed. 16% from there. Total, though, you missed on a big downtrend. Now, let's say you're still not long. Y'all, you missed the move, right? Wrong. Don't you guys remember 2002 to 2003 to 2004, for God's sakes? When the market hit bottom in 2002, did you think that you missed the move when it ran from October to November like this? 30%, short amount of time. Did you miss the move? No. And then, if you bought stocks and bought it out the breakout March, great job, bought in April. However, let's say you didn't buy them in April and March. Did you miss the move in May? No. June? Nope. July? Nope. August? Nope. September? Nope. October? Nope. If you don't believe me, once again, the best one I like to use is EGHT because this was the most clearest, and of course it worked. EGHT didn't build its first good base for me until here. Here was the first moment that EGHT was on my radar. In the first buy, right there. Second buy here. So 1030, 1031. That's whenever I first buy it. And it goes on to make almost 300% gain in less than a month. Did I miss the bottom, everyone? I'm going to remind you once again. So, I bought EGHT in October. Did I miss the whole year-long uptrend? From October to that October? 12 months. I'm 12 months late. The stock market is up 65%. I'm crazy for going long stocks here, right? Only if you don't like 300% gains. So, don't think that you're too late. As you can see, back in 2002 and 2003, the 50-day did not cross above the 200-day moving average until March, April. That came after the follow-through day, and that put it both above the 50 and 200-day moving average. So now that we're back about ready to get above the 50 and 200-day moving average, as you can see here how it nicely trended along the line there, if that happens here on this NASDAQ, and if the 50-day gets above the 200-day moving average, and then we get a follow-through day, another follow-through day, which we've already had a couple during this uptrend, if we get another bottom, then we get a 2 to 5% rally on higher volume than the day before, and it's a breakout, or it comes after a low volume pullback. That'll be a confirmation, a follow-through day. And to be honest with you, today's a follow-through day for the NASDAQ and S&P 500. The only problem is that it's not the confirmation follow-through day because the 50 is not above the 200-day moving average yet. Still, we've had a lot of big winners recently. Not the huge winners. We got 1999 to 2003. But guys, I don't think those times are going to come back ever again. I don't know. Hope I'm wrong. And I am wrong if you're a DDRX long. Let's say you went long here. You're now up 1,061% in almost 2 months. So that's pretty 1999, 2003-ish like. I'm going to go and wrap it up there. I'm going to get way more detail for subscribers in Part 2, Part 3, and Part 4. Part 2, I'm going to show you the Investors Business Daily 85, 85, and 100 index. I'm going to show you the commodities, gold, silver, dollar. I'm going to go over all of our new longs. So it's going to be a long video, guys. So we got a lot of longs. 15, including the platinum. Without the platinum, I think it's 8. 8 plus the 2 add-ons, so 10. So we got to go over 10 in one video. And then we got sells. They're all for gains. Every single one. 1, 2, 3, 4, 5, 6 sells. 1, 2, 3, 4, 5, 6, 7 sells. All 7 we're taking profits on. Then we have a new short that we took that we got to cut the loss on. 2% loss. To gains of 32, 43, 20, 43, 25, 79, 40, 20, 32, 36, 30, 21, 29, and 23%. I like those kind of numbers. This is the kind of market I can really like. All right, I'll be back with Part 2 to Part 4 for all my subscribers. Aloha. Have a wonderful weekend.